we're in a bear market. The question is, how long is the bear market going to last? And you're always going to have that group of naysayers where it's over, you know, and they'll be chanting that to people. No, I thought Bitcoin was easily got to 150,000. If you had laid out the macro case, well, I'm gonna stick to the 150. I'm going to stick to that. Because I think this thing will grind higher.
I know you might be depressed. You might even have friends who've given up on crypto, but keep in mind, this is still very early days for crypto. I think the best days of crypto are ahead. I think you don't want to lose hope in Bitcoin. It's been a better store of value than gold, even though gold has looked better in the past year. So if you ask me in 2026, I think gold is going to underperform Bitcoin. I think the best way to look at this is still think about Ethereum's price ratio to Bitcoin, okay? And the 8-year average is 0.0479. So if Bitcoin gets to 250,000, which I don't think is a stretch, that would value Ethereum at $12,000.
Bitcoin crashed hard from its peak, dragging the entire crypto market down with it. What looked like a victory lap into new highs turned into a brutal reality check, leaving many wondering whether the party is over. Bitcoin traded as high as $108,000 before collapsing back below $80,000 in just weeks. Ethereum fell even harder, dropping over 30% from its highs. The question now is whether this is just another correction before the next leg up or the beginning of something much worse. Most people expected 2025 to be a breakout year for crypto. Bitcoin ETFs brought in billions, Trump returned to the White House promising crypto-friendly policies, and regulation finally seemed to be on the horizon. But instead of rallying, Bitcoin got stuck in a trading range while gold surged past it. Gold rose 73% over the past year, while Bitcoin fell 29%, shocking many who believed Bitcoin was the better store of value. The narrative shifted fast, and suddenly gold looked like the safer bet while Bitcoin looked broken. Meanwhile, crypto expert Anthony Scaramucci says we are 2/3 of the way through a bear market, not at the beginning of a new collapse. He believes the worst is behind us, and that Bitcoin is about to reclaim its position as the dominant store of value. Scaramucci has been through 9 bear markets and says the setup right now looks exactly like the bottoms he has seen before. His message is simple: this is not the time to panic. This is the time to prepare for what comes next. Let's hear directly from Anthony Scaramucci for more insights. Please don't forget to like, subscribe, and enable notifications. Thanks for tuning in. Enjoy the rest of the video.
Listen, I mean, the market, we're in a bear market. The question is, how long is the bear market going to last? And you're always going to have that group of naysayers where it's over, you know, and they'll be chanting that to people. But I think we are learning about the demography of crypto, because if you have a currency debasement going on, you would have expected Bitcoin to do much better. But it turns out that 60-year-old people, and I'm over 60, but 60-year-old people have a tendency to buy gold and silver. And guess what? 60-year-old people are running most of the money at these big institutions around the world and the sovereign wealth funds and things like that. And so they left Bitcoin and other assets that we would like, and perhaps younger demographies like. And I think that's the big issue right now. That's the tension in the marketplace. And I predict, like most bear markets, it will end when we least expect it. But the RSI is below 30. The greed index on a 0 to 100 is at a 5 in terms of where it is as it relates to fear. And there were a lot of bearish people in that room yesterday. So I take that as a good sign. Having lived through 9 bear markets, when people are telling me they're bearish, they're typically talking their book, and that means that they're underinvested. I look at Solana as an engine that powered through the FTX crisis. I think he felt burnt by the whole situation. So it's sort of a hot stove he doesn't want to touch twice. And if you really look at the bear market, in my mind, the bear market really started last January. It didn't really impact Bitcoin until October, but go take a look at the coins that are not Bitcoin, or as you guys say, the altcoins. They haven't done well since last January. So to me, that's a positive, because bear markets typically last about 12 to 18 months. So we're more than 2/3 the way through the bear market. There's different types of people at that level, right? The CTOs look at it and say, well, weirdly, the meme coins have fortified the case to use Solana for real-world assets, because just take a look at the Trump coin activity prior to the inauguration and look at the volume that Solana was handling and look at the transaction speeds on Solana during that big throughput coming through the pipe of Solana. And so weirdly, you would say, well, the meme coins should probably hurt this because meme coins are garbage, et cetera. But if you're a technologist and you're looking at Solana, you're saying, wow, Solana can handle a lot of activity. And it's cheap, it's easy to use. Developers find it user-friendly. And I'll channel some, since I've channeled Kevin O'Leary, I'll channel some Anatoly here as well. Solana is built without a lot of innovation. He took the best parts of what he understood about computer programming and cryptographic blockchain and put it in Solana. And so what was he searching for? Speed, durability, very fast finality, and something that a developer could look at and say, this is easy for me to use. And so for all those things, I think Solana has met those tests. And Solana, to me, not being Bitcoin, is an anti-fragile layer one that I think is going to get adopted. I'm not saying it's going to be the only thing that gets adopted, but guys like Larry Fink, don't go by me, go by Tom Farley, go the president, former president of the New York Stock Exchange. Yeah. That world is changing. And just to really date myself, I was T+5 when I was your age. So if you were with me at Goldman Sachs in 1989, and you bought a security, it went through 7 different agencies before it got to your account, including the Depository Trust Corporation, and it took 5 days. Okay, so you got the trade here, but you didn't see it in your account for a week. Today we're T+1, and you guys know on Solana we could be an hour. We could probably be less than that, but of course you're going to have some regulatory oversight that's going to slow things down. I do think it's possible because I think that when you look at Washington, right? Washington is very different from crypto. It's very different from Wall Street, and I've got my 11-day PhD, so I can tell you how it works. What ends up happening there is there's varied interests, and so you have to measure everybody's interest. You know, on Wall Street we all like money. In crypto we all like money, so we know the interest, right? We're all on the green team. But in Washington, there's blue, red, purple teams. There's all different types of stuff. And if you sit down and you just look at everybody's interest, the White House, the industry, the banking community, the Democrats, the Republicans in the House and Senate, they all have a mutuality of interest to get it passed. Now, the bad news for the industry, it's not going to be what we want. Okay, generally we're libertarians and we want to be left alone, and Washington doesn't know how to do that. And the American Banking Association has a lot of draw, a lot of swag with the Congress. And so they're going to push back on some of the competition that the crypto industry wants to give them. And that's Washington. That's the way it works. That's why they say you don't want to see the sausage being made in Washington. You just want the final product, right? It's a nasty process. And so I'll predict that the legislation gets done. It will not be as good as we would like it to be. But I would tell you that progress is more important than perfection. In fact, the enemy of progress is perfection. And I'll just give this quick example, and I did mention it to Tom this morning from the stage. When Gary Gensler was forced, literally by a judge, to approve the cash or spot Bitcoin ETF, he didn't want you to be able to put Bitcoin into it. And so everyone was complaining about it, but we got it done. And now with Paul Atkins, we've been able to make that change. And so that's what we have to hope for with these pieces of legislation that are coming forward, and I think they will pass. No, I thought Bitcoin was easily got to 150,000. If you had laid out the macro case, you had laid out everything. I missized the amount of whale selling, and I also, even though I was worried that the Trump meme coins would slow down the regulation, which they did, I still thought they were going to get done in 25, and I got that wrong. And that hurt the market. And by the way, listen, guys, you're not dummies. Certain things go on, big trades happen, and then announcements come out and move markets.
Yes.
And so don't kid yourself. A lot of people in Washington knew that this bill wasn't getting passed, and some of that capitulation took place ahead of the rest of us figuring that out. Well, I'm going to stick to the 150. I'm going to stick to that, because I think this thing will grind higher, and I think once that legislation does pass, it's going to open a floodgate of activity in the money center banks in the United States. And remember, that's the real circulatory system for global capitalism. And so this is a small asset class relative to the other asset classes that it should be compared to.
Scaramucci explains that Bitcoin underperformed because of demographics, not fundamentals. 60-year-olds run most of the big institutions, sovereign wealth funds, and money management firms worldwide. When currency debasement hit, they bought what they knew, which was gold and silver. Younger investors understand Bitcoin, but they are not yet the ones controlling trillions of dollars. That created a mismatch. Bitcoin should have rallied, but it was left behind. Scaramucci says it won't last forever because, once demographics shift, Bitcoin will benefit from the same forces that pushed gold higher. He points to the Fear and Greed Index, which sits at 5 out of 100, signaling extreme fear. The RSI dropped below 30, another classic oversold signal. Scaramucci says when everyone in the room is bearish, it usually means they are underinvested and talking about their book. He said he was at a private institutional summit where most attendees were negative on crypto, and he took that as a bullish sign. Bear markets end when no one expects it, and right now, no one expects a rally. Tom Lee of Fundstrat adds that Bitcoin cannot turn around until gold starts underperforming, and he believes that moment is coming soon. Gold has grown so large that a single day of movement in gold can trigger margin calls across every other asset. On January 31st, gold moved $5.2 trillion in a single session, which is 4 times Bitcoin's entire market cap. Now let's listen to Tom Lee.
I know you might be depressed. You might even have friends who've given up on crypto, but keep in mind, this is still very early days for crypto. I think the best days of crypto are ahead. So I want to cover this in a few parts, okay? The first is I want to talk about why gold kind of won 2025, but I think this is the year that Bitcoin is going to resume its narrative as the store of value. The second is that crypto still has multiple adoption drivers, and why I think Ethereum is going to be one of the central casting characters. And then the third part, which again, in 15 minutes, I'm going to cover 3 things, is why there's the rise of dominant DATs and why Bitmine is probably your best way to have exposure to Ethereum. Okay, so gold won 2025. You know, if you think about this, both are stores of value, but gold rose 73% in the past year, while Bitcoin is down 29%. And I think this caused a lot of people to throw in the towel around Bitcoin, and I think it's part of the reason why we're in a mini winter. There's 5 reasons gold can do well, okay? The first is geopolitical uncertainty, but in that scenario, crypto should do well. The second is dovish central banks, and in that scenario, crypto should do well. The third is currency debasement, which has been happening. And again, gold does well and crypto does well. But there's 2 other scenarios where crypto won't keep up with gold. One is if there's a lot of price momentum in precious metals. And the second is that if there's a loss in the fiat system entirely, because as you know, Bitcoin is digital money. And if we stop using money altogether, Bitcoin's not going to outperform. So I think that this is the scenario that took place, okay? And so the question is, are we at the end of that period? One way to think of it is, I think it's probably near peak gold. Gold today has a $41 trillion total market value, okay? That means it's bigger than the S&P 500. In fact, it's the same size as the entire Asian stock market. Here I'm highlighting that just the intraday move in gold on January 31st was $5.2 trillion, okay? That's 4 times the size of Bitcoin itself. So gold has gotten so big that when gold makes big moves like that, it's going to trigger margin calls everywhere else. And I think if you're wondering why Bitcoin got clobbered this year, I think it has to do with the fact that gold has just gotten so big. But here's the thing. Is gold a good store of value? Well, since 1971, I've plotted gold's return versus inflation on a 3-year rolling basis, okay? And every time it's red, gold did worse than inflation. 48% of the time in the last 50 years, Gold has not stored value. It's done worse than inflation. And then since Bitcoin was created, okay, Bitcoin has only underperformed inflation 5 months out of 160 months, which means 3% of the time. But in that same period of time, gold underperformed inflation 44% of the time. So again, I think you don't want to lose hope in Bitcoin. It's been a better store of value than gold, even though gold has looked better in the past year. So if you ask me in 2026, I think gold is going to underperform Bitcoin. Okay. I think so. I think crypto can't turn around until Bitcoin turns around, but I think Bitcoin can't turn around until gold actually starts to underperform, which again, I think it's this year. And so let's turn to Ethereum. A lot of people are frustrated, but keep in mind, Ethereum since 2018 has fallen more than 50% 8 times. In fact, last year, Ethereum fell 64% from January to March. But 8 of 8 times, Ethereum's had a V-shaped bottom, okay? So it's recovered 100% of the time within almost the same speed it fell. So if you ask me, I don't think anything's changed. Is Ethereum going to have a V-shaped bottom after this decline? Yes. But obviously your question is, has Ethereum bottomed at 1890? We have at BitMine, we work with Tom DeMark, who's I think one of the best market timers. He says that Ethereum just needs to touch 1890 again, which he calls an undercut, and then that would be a perfected bottom. Well, let me just talk to you about the future price of Ethereum. So I think the best way to look at this is still think about Ethereum's price ratio to Bitcoin, okay? And the 8-year average is 0.0479. So if Bitcoin gets to 250,000, which I don't think is a stretch, that would value Ethereum at $12,000. But I think that's too low. I think Ethereum is really the story for the next 15 years around crypto, because that's where Wall Street's going to build, and that's where AI is going to take place, and also where creators like Mr. Beast are going to be building products. So it may recover to its 8-year high, 2021 high of 0.0873. That's $22,000 Ethereum. And of course, it can go higher if ETH becomes a payment rails like Joe Lubin talks about.
Lee explains that when gold moves like that, it forces liquidations across the market, and Bitcoin gets hit in turn. But he says gold is at peak size now, and the momentum is about to shift. Since 1971, gold has underperformed inflation 48% of the time, while Bitcoin has underperformed inflation only 3% of the time since its creation. That makes Bitcoin the better long-term store of value, and the market will eventually recognize that again. Lee is making a bold call that Bitcoin will break its 4-year cycle and hit $250,000 in 2026, despite 2026 typically being a year of lower prices. His reasoning centers on what is happening with the Federal Reserve and institutional adoption that most people are ignoring. On the other hand, Scaramucci admits he got his 2025 prediction wrong. He thought Bitcoin would easily reach $150,000, but he underestimated 2 major factors. First, he did not expect the amount of whale meat that hit the market. Second, the Trump meme coin sucked liquidity out of the entire crypto space starting in January 2025. Most people do not want to talk about it because they are nervous about criticizing the administration, but Scaramucci says the truth is that those coins damaged the market. The altcoin bear market actually started in January 2025, months before Bitcoin began falling. That puts the crypto bear market at over 12 months already, and Scaramucci says bear markets typically last 12 to 18 months, which means we are nearing the end, not the beginning. Scaramucci also addresses regulation, which he says will pass before Memorial Day despite not being everything the industry wants. The American Banking Association wields too much influence in Congress, and it will push back hard against crypto competition. Scaramucci says the industry needs to accept progress over perfection, because the enemy of progress is perfection. He points to Gary Gensler being forced by a judge to approve the Bitcoin ETF, which initially came with restrictions that were later removed under Paul Atkins. The same thing will happen with stablecoin legislation. It will not be perfect at first, but it will improve over time. Scaramucci warns that waiting until after the midterms could backfire, because if Democrats take the House, the process will slow down even more. Both Scaramucci and Lee agree that the market is setting up for a major move higher, but only after this correction plays out. Scaramucci sticks with his $150,000 Bitcoin target by the end of 2026, and Lee is calling for $250,000. Now, do you think Bitcoin will hit $150,000 by the end of 2026, or is this just another failed prediction? Let's have your thoughts on this, and thanks for watching. And don't forget to like and subscribe.